The intent to exit the highly inflated, faith-based fiat dollar is clear. The U.S. national policy has weaponized the dollar as leverage in international trade. The unfair use of this leverage against trading partners, exporting U.S. inflation by forcing countries to hold depreciating dollars in reserve. With all these things considered, the real death of the U.S. dollar will be domestic, not foreign. The ever-growing national debt and excessive money printing is just scratching the surface. The Brics currency will merely serve as a finishing move, not a catalyst. To bring context to the Brics currency and gradual de-dollarization, we will hear from experts such as Ray Dalio, Luke Gromen, Jim Rickards, and expert Simon Hunt.
Because what's happening elsewhere in the world is a large part of the world has got fed up by being told what to do by America. And what you're seeing is the enlargement of BRICS Plus. The trade between Russia and China is growing exponentially, with Russia holding a large trade surplus. That trade surplus is held in a gold differential account with the PBOC. What's now going to happen is that member countries can trade within themselves or even externally eventually on a currency that's based on 20 commodities that they produce, valued not in US dollars, but in grams of gold. The Gulf countries make the decision, which will be a step-by-step approach, to ditch the dollar and to trade other currencies than the dollar.
The portfolio is very skewed toward dollars and dollar assets, the world asset portfolio. So the holding of dollar bonds, whoever is going to hold those dollar bonds, that's a pile of dollars for a long-term pile of dollars. And how you feel about those dollars bonds as there's a reconsideration of how important the dollar is as a world's reserve currency.
Deficits, government debt, printing of money. Most of the people who have opinions about those subjects are not actually studying how the machine works, going back in history and saying what are those cause-effect relationships.
The U.S. and EU sanctions of Russia's FX reserves, I think, are a Pandora's box that has been opened and I don't think can be reclosed. The day before these sanctions were rolled out, and you can see Jamie Dimon on TV on Bloomberg saying, don't weaponize SWIFT, it's a threat to the dollar system. You can see Citigroup advising the White House, don't weaponize SWIFT or the dollar system, it's a threat to the dollar system. The biggest threat to America is not climate change, it is not weapons of mass destruction, it is our national debt. Right now, we are borrowing money from China to build weapons to face down China. This is not a sustainable strategy. We can't fight a war against China without Chinese supply chains. This is a matter of utmost U.S. national security. So defense is now looking at the dollar system that forever was seen as nothing but a strength, as a literal act of war by China against the United States. They can defeat the United States in war by simply crushing our supply chains before any war ever starts. And they've effectively done that. We've seen shifts by the Russians, by the Chinese, out of dollars into gold in the case of the Russians, out of dollars into gold. I think it goes into things that better hold purchasing power, right? So it's going to be gold, hard assets. It'll be a broad-based exodus out of FX reserves, out of Western sovereign debt as FX reserves. You know, that's a $12 trillion pool of money right now, probably 65% dollars.
And you put all that together and then do some basic math involving a money supply, physical gold in existence, what the price of gold would have to be to restore confidence, lost confidence in the paper money system. You know, and I spoke to Paul Volcker about this, and he said he doesn't favor going back to gold tomorrow, but he said if you did, the price of gold would have to be enormously high, unimaginably high, in order to support the money supply. And that's another canard. People say, well, you can't have a gold standard because there's not enough gold. That's completely nonsensical. There's always enough gold. It's just a question of price. In other words, at $1,200 an ounce, right, the gold supply doesn't support world commerce, but at $10,000 an ounce, it does. And so the problem isn't the supply of gold. The problem is the price. There's no central bank in the world that wants a gold standard, but if you had to go to a gold standard to restore confidence, the low end of the implied non-deflationary price range is about $10,000 an ounce. The gold price is going to have to be higher to get the miners to dig up more. Or if the miners throw in the towel and stop digging it up, the gold price will go higher because of scarcity on the supply side. So either way, it goes higher. Even if central banks don't want a gold standard, you can go on a personal gold standard. You can personally protect your wealth by buying some gold, putting it in safe storage for yourself. And I guess I call it you don't have to wait for a central bank gold standard. You can go on a personal gold standard.
how do you hedge against an ever-depreciating fiat dollar? Own the opposite. Sound money. Sound money is built with assets that have scarcity, a long track record of trust and value, and cannot be printed by central banks. To paraphrase the famous hockey player, Wayne Gretzky, I go to where the puck is going, not to where it was. To learn more about how you can protect your wealth, see the links in the video description to access the free gold investment guides from the best gold investment companies that we have personally researched and vetted. Thank you for watching.